All right, everyone, welcome back to the channel. We're going to talk a little bit about what I think is our superpower over hedge funds, large institutions, the big banks, the guys we are trading against. And this really came to light in last Monday's action, where everybody woke up to a market that was almost lock limit down. For those who don't know, market goes down too much in the day, they shut it down for a period of time, let people get their heads back, open it back up. It doesn't happen very often. Last time I saw it was 2020 during the COVID financial collapse. And it's one of those things that when it happens, it's very scary for a lot of the market. We were very close to that. There was a lot of turmoil going on. Twitter was absolutely panicked. But myself, I knew this was the time that I could utilize my superpower as a retail and a systematic trader. So, first of all, let's just go to some tweets that I talked about in the morning here. And we'll just talk about here with these two tweets right here. So, first of all, this was 5 minutes before the open uh, on what the market was feeling pretty crazy out there the day of. You just got to convert for my times out. But I was saying these are the moments. Oh, you got to go back here. Say these are the moments where I love being a systematic trader, turning off everything except the day trading algo and letting everything shake out. So we'll talk a little bit more about that. And then the next day, a few minutes after the market opened, I said, hey, I'm going to continue to keep everything in cash. And then the couple days after that, I told the people at StatsEdge Pro and tweeted as well, hey, I'm going to start to turn things back on. And there's a certain algo that I'm going to favor. Now, we'll get into a little bit why that is in just a moment. We'll get to that. But what I want to talk about is what this superpower is and why I think this superpower is very important. And the first bit is just that a lot of people don't understand that there are large banks and there are large institutions, and they have to follow some certain mandates. They are by not law, but by design, they have to follow different mandates. One of those mandates, for example, is simply saying I need to be invested at least 90% or 99% of my portfolio at any given time. As someone who's worked in the hedge fund industry for 10 years, you'll be shocked how common that is. And part of that clause is that it's to make sure that the hedge fund manager is always doing something and always looking for opportunities and always being invested somewhere that they believe will generate alpha and return cash for their investors. The other thing, the superpower that we have, is the speed at which we can make these decisions, get into and get out of decisions, or get into and out of the market. Um, you know, have an idea, make a decision, take a trade. Maybe we realize we're wrong because it's not working out right away. We can get right back out. Large institutions take days and weeks and months to work into and work out of positions just because they're buying and selling multi-million or more dollars worth of stock. Where, even if you have a very large account, I doubt you're trading multi-million dollars worth in and multi-million dollars worth out. So, those are the two superpowers that I believe we have. Now, how do we utilize those? As I mentioned, when the market was gapping down and everything was going crazy, I just put out a quick tweet. I sent an email to StatsEdge Pro subscribers and I said, hey, I'm going to sit this one out. I'm going to let whatever stop losses get hit. I'm going to just go do something else. I'll come back in a day or so once the market's kind of chilled out. Now, did I just do that because I was scared? No. So this is, the superpower being the retail trader is this nimbleness. Think that you're a jet ski and a large hedge fund or institution is like a battleship. You can make moves and turn much quicker than they can. You can adapt much more easily than they can. The power of being a systematic trader for myself and people over at StatsEdge Trading who kind of follow some of what I do is that we can always make data driven decisions. And this is why I love companies like Trade Ideas because they provide the data and you can make decisions based off what you're seeing in the market as opposed to just what the vibes are, I guess, at the time, as the kids would say. So I want to get back in and show you guys why I made that decision and what kind of the charts looked like at that time. So what we're seeing here is the green line is a pullback algorithm that I'm running over at StatsEdge Pro, and that's something that I trade with my own money as well. And essentially what it's just doing is looking for very strong moves on strong stocks, and we're trying to get a pullback on those strong stocks. We can buy into that pullback and then sell very quickly after. This is a fairly high touch algorithm that's looking to, again, buy dips and then take profits relatively quickly on it. It's not like a long trend following type of thing. It's more of a fast, hey, this was strong. It's come back down to an interesting price that has been back tested. Let's get involved and then get out a little bit later. That's the idea behind it. Now, you can see that this thing isn't necessarily scared of bear markets, where we have, for example, I'm just leaning over here because we have the dot-com bubble, and over the length of most of the dot-com bubble, this thing still actually did okay from an equity point of view. We have the great financial collapse right here, and over a long period of time, this system did fairly well. And then we also have right here the COVID, I guess, collapse. This one didn't do so well in the COVID collapse, so we're going to talk about that a little bit. And also, we had the bear markets that happened in 2018, 2019. Call it the Trump tariff, fighting with the Fed, interest rate, whatever you want to call it, where the market did have two kind of very short bear markets here, and the strategy did okay. So why then, if the market was looking to sell off, was I looking to turn off the system if in prolonged bear markets it does okay? Well, because, and we'll show you these, in swift downward markets like we had in 2020, like we had, I'm going to highlight this area right here. Uh, I was trading during this period of time. I don't know if a lot of people watching this video was, but this was, you called the Lehman Brothers moment, where Lehman and Bear Stearns, they went bankrupt. That created a lot of very short-term panic, even though there was a big bear market before this. And, the bear market was a problem after this. That massive moment caused a lot of panic. You can see the algorithm didn't do so well there and didn't do so well here. I'm going to zoom in to show you kind of how bad it was. Now, during the last bear market, you can see right here, it did okay. There was a pretty kind of substantial pullback on a couple names. Those happened during these fast moves down as well. So I look at this and I say, well, if I wanted to smooth out this equity curve, as opposed to trying to really hunt and peck and try to, do something programmatically that would get me out of these situations, these positions, what I could do instead is simply turn off the system when these down moves happen. And this is why, even as a systematic trader, I spend so much time analyzing the market and sending that to you guys. You can sign up at StatsEdgeTrading.com. You can get that completely for free. Every weekend, I take a look at the market. I kind of look through everything and say, how are we doing? Where is the relative strength? Where is the relative weakness? And again, the reason I do it is because I'm trying to figure out when these events will occur so I can just sidestep them. Right now, let's go into the equity or the drawdown curve and actually see a little bit better what happened here. I'm going to turn off. So this red mark is the drawdown of the benchmark or the S&P 500, but turn that off and turn that on. There we go. This is the drawdown of the system. So the first little spike down that I highlighted, that was the great financial collapse one. At the time, this was the largest drawdown that happened in the system right here at 15%. And then we had another one here at 25%, and that was 2020. So I look at those and say, yes, they were drawdowns. They lasted a couple weeks to a couple months, and then we were at a new equity high, and everything was great. Totally fine to just respect the system completely and say, I'm going to just deal with it when these situations occur. Myself, I think that the edge that I have that I just talked about, the ability just to shut things down, to let cooler heads prevail, and then quickly turn them on a couple days or a couple weeks later, that if I can sit out a couple of these drawdowns throughout my period or throughout my life and move that equity curve up and smooth it out just based off of the ability to say, hey, COVID's happening. That wasn't really a shock event to anybody when the market went crazy there. And being able to sit out of them, again, I think that's my superpower. Now, with everything, there's nothing perfect about the market. There's no crystal ball. So if you decide to do this as a trader or an investor, and if you decide to react when you see large events, hopefully based off some sort of data, what is it that is the potential miss that you're going to occur? Well, we're seeing a little bit now in the market. So everything in trading is a trade-off. There's nothing perfect in the entire universe of trading. So if you are to turn off your system or your strategy and sidestep these volatile markets, what you're going to miss is that as the markets recover, you're probably not going to bottom tick the markets turning back on your strategy. So what you need to do is need to say, I'm okay with sacrificing volatility. I'm okay with sacrificing a little bit of return in exchange for also reducing volatility. And if you're not okay doing that, then you're better just to turn everything on, ride it out, and go from there. But as you're trying to evaluate your trading and say, what is my edge over the market? We have a lot of resources for you over at StatsEdge Trading. Go check them out. But a big one can just be, I'm more nimble. So make sure you're making use of being nimble by, if the market proves you wrong or if the market's doing something you don't expect, you sidestep, you gather a plan, and you come back stronger than ever. Thank you guys for tuning in. Just some thoughts that I had out there. If you like this kind of content, make sure you hit a like, comment, share, all that kind of stuff. And I'll talk to you guys next time.